All right, so ready to dive into some financials? We're looking at Wells Fargo's third quarter earnings for 2024.
Yeah, should be interesting.
It can seem like a bit of a jungle, all those numbers,
Yeah.
but that's what we're here for, to make sense of it all.
Exactly. Break it down. See what story those numbers are telling.
And maybe uncover some hidden treasures along the way.
Yeah.
So first off, the bottom line. Net income. Wells Fargo dipped this quarter.
Yeah.
Down from last quarter and down, what is it, about 11% from this time last year.
Yeah, about that.
That's got to raise some questions, right?
It does. But it's important to look at the whole picture. It's not just Wells Fargo. It's kind of the whole banking sector,
Yeah, right.
A lot of factors at play. Those interest rates being a big one.
Oh, interest rates, always a hot topic. Higher rates, though, I mean, on the surface, more money for banks from loans, right?
You'd think so, wouldn't you? But it's not quite that simple.
No. Okay, so break it down for us.
Well, if you look at Wells Fargo's net interest income, that's the money they make from interest on loans minus what they pay out on deposits.
All right.
That actually decreased. Their net interest margin, which is a big deal for profitability, it's shrunk.
Yeah.
Went from 3.1% to 2.74% year over year. Basically, the spread between what they're earning and what they're paying out getting smaller.
Putting the squeeze on profits, huh?
Exactly.
So those rate changes, they can really throw things off balance.
Definitely.
But even with those challenges, got to be some positives in there, right?
Oh, absolutely. Definitely some bright spots like investment banking fees, up 37% compared to this time last year.
Whoa, that's significant. What's driving that kind of growth?
Could be a sign of a pickup in mergers and acquisitions, companies feeling more confident, maybe ready to make some big moves.
Interesting. And speaking of positive movement, mortgage banking revenue is also looking good. Up 45% year over year. That's a healthy jump.
Definitely points to a strong housing market, even with those rising interest rates. Demand still there.
Resilient, huh?
Seems like it.
It's just amazing to me how these reports, they don't just tell you about the company, they tell you about the whole market.
They're a reflection, for sure.
So yeah, interest rates might be causing some choppy waters, but hey,
Yeah.
Wells Fargo's navigating.
Right. Certain parts of their business seem to be riding those waves pretty well.
Now let's talk about their core business, consumer banking. This is where it gets real, right? What's the story there?
Well, it seems to be holding steady overall, but there are a couple things that stand out. Debit card purchase volume is up. That's a good sign.
People are still spending.
Exactly. But we're also seeing an increase in delinquency rates for credit cards and auto loans in particular.
That does sound like a bit of a warning bell. What's causing that? Consumers feeling the pinch.
That's the million-dollar question, isn't it? Could be a few things. Inflation's still a factor, even if it's easing up. Makes it harder for people to keep up with payments.
Yeah, true.
But we also had those unusually low delinquency rates during the pandemic.
Right. Stimulus checks, loan forbearance, all that.
Exactly. So this could just be things going back to normal, pre-pandemic levels.
Course correction, not a crisis.
Possibly, but it's something to watch for sure.
For sure. Okay, before we wrap up this part, I got to ask about something else that caught my eye. Commercial real estate. Saw a bit of a drop in loan balances there. Should we be worried?
It's on my radar, that's for sure. Commercial real estate's always a bit sensitive to economic shifts.
Makes sense.
Think about all those office buildings, half empty because everyone's working from home. Not exactly a good sign.
No, not at all.
So yeah, it's something to keep an eye on. Could be businesses hesitating to invest, or it could be Wells Fargo being more cautious with lending.
Another ripple effect of those economic currents, huh?
Exactly. This is what makes these reports so fascinating. You're not just looking at numbers, you're seeing connections between sectors, market trends, the whole economy.
Unraveling the web.
Precise.
It's like we're piecing together a puzzle. We've got these interest rate swings, some positive signs in investment banking, mortgages doing okay, but then there's that little snag with the delinquency rates. Makes you wonder.
Yeah, definitely a piece of the puzzle you don't want to ignore. Like you said, when those delinquency rates creep up, especially for credit cards, auto loans, it kind of suggests some folks are struggling to keep up.
And for a bank like Wells Fargo, so much of their business is consumer banking. That's got to be a concern, right?
For sure. Now, we talked about those rates being artificially low during the pandemic, so maybe this is just a correction, BUT.
There's always a but.
Right. We got to consider other things. Inflation's still a factor. It might be easing, but it all adds up, People are feeling it.
Death by 1,000 cuts, as they say. Even if it seems manageable month to month, it gets you in the end.
Exactly. So we look at these delinquency numbers, but we also look at other economic stuff. Wells Fargo's report, it's got data on deposits, spending habits, all that. Gives us a better picture.
So it's not just are they going up or down, it's WHY. Any other clues in this report that tell us what's up with how consumers are doing?
They mentioned something called the efficiency ratio. It's basically how well are they managing costs versus how much money they're bringing in. Lower is better, means more profit.
Okay, so lower's good. What's theirs look like?
Improved year over year. So that's a good sign. Means they're keeping things tight, which makes sense in these uncertain times.
Like they're battening down the hatches, just in case. Speaking of potential storms, can't ignore the elephant in the room, right? Commercial real estate. We saw that dip in loan balances. Got to dig into that. What's the deal there? What should we be watching out for?
Good point. It's a whole other layer to this. We talked about working from home, empty office buildings, but it's bigger than that. Different types of commercial real estate, they're all being affected differently.
Well, interesting. So it's not just about empty offices.
Nope. Think about malls. Online shopping was already changing things, then the pandemic just sped it all up. Lots of malls are struggling, empty stores, no one walking around.
Yeah, I do most of my shopping online these days. It's just easier. But how's this all connect back to Wells Fargo and those loans shrinking?
Banks like Wells Fargo, they're super involved in commercial real estate. They give out loans for everything. Office buildings, shopping centers, you name it. So when those properties start having problems, people not paying rent, values going down, even the risk of, not paying back those loans.
Defaulting.
Exactly. It all impacts the banks.
So if things go south with commercial real estate, Wells Fargo feels it.
Yep. Now, banks aren't stupid. They know this. They've got ways to cushion the blow. They don't put all their eggs in one basket. They do their homework before giving out loans, and they put money aside just in case. But still, if commercial real estate tanks, it's gonna make waves.
Especially with interest rates being so unpredictable on top of everything else. So how does this all connect back to the big picture? If someone's listening thinking, okay, interesting about Wells Fargo, but what about ME? What does this all tell us about the economy as a whole, and how do we use this information to make smart choices with our own money?
$1 million question right there. And it's one we need to break down carefully. So, to start.
Okay, so we're seeing some, cracks in the foundation maybe, with those delinquencies and this whole commercial real estate thing.
Yeah, I think that's a fair assessment. Definitely areas that need a closer look, could be signs of bigger problems brewing.
So where do we go from here? What should people be paying attention to? Like if I'm listening to this, thinking about my own finances, what are the takeaways?
That's the key question. And it brings us back to that big picture idea. Wells Fargo's report, it's not just about them. It's a snapshot of the whole economy right now.
Right, like a microcosm.
Exactly. So to answer your question, I'd say there are 3 main things to keep an eye on.
Okay, I'm listening.
Number 1, watch what the Fed does with interest rates.
Makes sense.
We've talked about it. They have a huge impact. Will they go up more? Will they stay put? Every move they make affects borrowers, investors, the whole shebang.
They're kind of calling the shots.
Pretty much. Number 2, keep an eye on inflation.
Still a concern.
It's cooling down, but it's not gone. Pay attention to prices, everyday stuff, groceries, gas, all that. Gives you a sense of the pressure points, whether the economy is really cooling off or not.
The little details add up.
Exactly. And number 3, don't forget about the human element. Confidence. That matters.
How so?
If people are nervous about the economy, what do? They stop spending. And that can actually make things worse.
Self-fulfilling prophecy.
Exactly. Emotions play a role. Can't forget that.
It's not all just numbers and charts, huh?
Nope.
Well, this has been fascinating, to say the least. Went from Wells Fargo's balance sheet to the state of the world, practically.
That's the goal. Connect the dots.
And hopefully give people some things to think about, maybe make some informed decisions.
Exactly. Knowledge is power, right?
Couldn't have said it better myself. Thanks for joining us for this deep dive. Until next time, stay informed and keep asking questions.
Absolutely. Always keep learning.